Hey everybody, Mark Walters here. In this video, I'm going to show you some ways that you can save on your taxes when you go to sell your investment property. Now, there's nothing wrong with buying property and flipping it and getting some fast cash. But if you really want to build your wealth over the years, well, then you want to seriously consider doing tax-deferred exchanges, also known as a 1031 exchange. Now, why would you want to do this? Well, it's important to realize that even though you might be doing this on your own, you indeed have a partner, and that partner is the US government. And guess what? They always want their share. So when you're selling your investment property without using a tax-deferred exchange and you've got a capital gains, well, guess what? Your partner's going to have their hand out. And if you've been enjoying depreciation with that investment property, well, chances are there's going to be some recapture of that depreciation as well. So it can be very expensive. But one great thing about tax-deferred exchanges is what you're doing, even if you are buying and selling, buying and selling, buying and selling, if you're doing it over time, doing it the right way, using tax-deferred exchanges, what you're really creating is one continuous investment, because you're not having to pay taxes. You are deferring those taxes. Now, what that does is that means you are accumulating your wealth. And when you've got that money to work with, well, then you can build your wealth much faster. Now, why would you want to do that? Well, of course, to be able to save money on your taxes. But if you've got an investment property that you want to exchange for something that is bigger and better, and of course, that's pretty much the rules. I'm not going to give you the total ins and outs because these rules do change over time, but it's just important to know that you should recognize them and take advantage of them when the situation is good. So it's got to be like kind, so investment property for investment property, and you're trading up. You're not trading down, because if you're trading down, then you've got a capital gain. But if you're trading up, so you're growing your wealth, well, then you're doing a couple of things. You might be creating a situation where you're getting rid of a property you really don't want anymore for whatever reason and getting a more desirable property. Maybe that property will kick out more cash flow for you on a monthly basis. Maybe it's got a bigger depreciation situation for you, so you can depreciate more of your taxes, thus keeping more of what you make, and that can be a very good thing as well. And then if you're doing this over time, well, you're just growing into bigger investments, and growing your wealth at the same time without having to pay taxes each time you sell something. So by using a 1031 exchange, a tax-deferred exchange, you're doing things the way that the rich do them. And I've got a guide on that on my website, cashflowinstitute.com. Just go to the top of that page, go to courses. I've got a very affordable course on this. But if you can save upwards of 25% on a transaction, that is huge money when you're talking about real estate. So I highly recommend that you consider tax-deferred exchanges so that you're not always paying your partner, because you're the one that takes the risk, you're the one that's doing the work, and it's very rare that the government allows us to keep a lot of our money. They're always looking for ways to tax us just a little bit more. So when they give us an opportunity to keep some of the money, especially when the gains potentially are very, very large, well, it's important as savvy investors for us to take advantage of that. I'm Mark Walters, and I look forward to sharing more with you very soon.